welcome to Trading Lounge and the US indices, and starting with the S&P on the daily chart here. So for this top up here, we've either got wave 5 as a top, or we've got wave X here, so a W, X and Y here. And in the Y here, we're looking for an A wave, a B wave and a C wave here. And between B and C here, we're looking for 5 waves. We have 1 and 2 here, and 3 and 4, and down 4, 5 here. So I'll just leave that. Our main focus was really today about this little section in here, not so much the larger count. In both counts, we'll still see 4 and 5 to come down through here. So on the 4-hour chart here, we're looking either B or 2 here, but 1 and 2 here, and 1 and 2 and 3 and 4 and 5 here for the third wave. The fourth wave here, pulling back to the 38.2%. It's moved through that back into the 50% here, but it's fine because the 2500 area here, this heavy line through here, is a medium level, halfway between 2000 and 3000 obviously, but I call it a medium level, and it should play out. And when a market moves through a level, it'll always come back and retest it. So most cases, 90% of the time. So yeah, and here we need to look at this little correction here, even though it's moved past the 38.2, but I doubt if it will find support on top of the 2500 here. It can pop its head above it, but shouldn't find support. So let's just have a look, drill in and have a look at this here. So we're looking at the move up here now that it's matured, and it's all easy in hindsight, but an A wave, a B wave and a C wave here. The C wave from B to C here will be shorter than wave A here. In fact, the distance from wave B to C here would be 61.8% of the length of A, which will take us into the 2500 area here. So we should be close to a top and a turn here now on the tick chart here, just to unravel this a little bit here. So we've got an A wave here, B wave here, and I can count now from this up here, I can count 5 waves up here in terms of 1 little ABC for 2 here, and then 1 and 2 and 3 and 4 and 5 for the third wave, fourth wave, and 5 waves for the fifth wave. So we can actually have a top in play here. There's only one little glitch here, and it's this little guy here. So I'm not sure if this, I've got the A, the B and the C here. So I know from this low I've got 1, 2, 3, 4, 5 here. So I've just got this extra wave here. So there can be an extra wave to play. I can't draw here. There can be an extra wave to play out here, to come up through here before this folds over here. So I can draw on this side of the price here. This is just my guide stick. This is 61.8% of wave A here. That was how I was getting this target. Well, the 2500 as well. Well, that's not even on there, is it? Yeah, sorry, I forgot what I was going to say. Yeah, okay, right. So the normal pattern to come up to a level is the arrival, then there'll be some sort of reaction, which is normally in 3 waves, and then we get the first high above the level, which will be in 5 waves. Once we've got this first high above the level here, then the market will fold back here. So this is where we can put stops here, and then the market can come back up here and retest, and then this creates the short trade here after the retest. And the long trade here, if this is going to find support, this is what support is going to look like. So it's the arrival, the reaction, the first high above the level, an ABC pattern, and then straight up from there. So this would create the long trades on this side of it. In case we're wrong, that's where you need to be long. And this is all pretty much the same pattern throughout the global markets. So for the Nasdaq here, just starting on the 4-hour chart, we were looking at slightly different count here, but 1 and 2, and wave 3 here, and we're looking for wave 4 to pull back to the 38.2% mark. It also has moved higher It has a medium level, the 2,500 that we're just looking at for the S&P. In relation to that, this 6,500 here is also a medium level as well, as halfway between 5,000 and 8,000, which are two major levels, and then coming down into the minor levels here. So the trading levels are based on the Fibonacci numbers, but as a price ratio, a little bit more to them than that. A couple of different aspects in terms of geometry and also psychology as well, but I won't get into that here. So yeah, so we need to look at this ABC pattern to the upside here, and starting with the 1 hour chart, it will look a little bit like this here. So I think there's a bit more to go here. So an A wave, a B wave, and now we've got this C wave up here, so it will move a little bit higher here. We have got short trades in the market here, so we need to wait for the C wave to finish up, and then we can put the stop on top of that fifth wave here. Let's go in and have a look at this structure here. I'm not sure if I've done this on the tick chart. Okay, I have. I thought there was still one more to go. This length here is also the 61.8% of wave A as such. So there was one more here. So we've got from the low here, we've got 1, 2, 3, 4, 5 for 1 and 2 and 3 and 4 and 5 here. That could also be 5 here, but an ABC here. And then we've got still got this little extra one here too. So I mean, from here I can see I've got 5 waves up here for 1 and 2, and then the 3 and 4 and 5. So I'm happy with that, but I've still got this extra one here as well. So what could happen here is that even though we've got 5 waves there, the other side to this is we've got wave 3 here and wave 4 here. So this can actually pull back to this level here. Before having one more move to the upside here. So you certainly need to allow that to play out to finish off here. But anyway, let's see how we go. The idea with all of this this current rally was just to observe it and see how it would pan out. I was hoping that we had the wave 4 at this point here, because I could get an ABC to this pattern up here, but obviously wave 4s can get complicated, and it's just gotten larger, and it's something that we need to accommodate. The short trade through here too, if you're looking to get back into this or you're out or whatever, is that we can look to pretty much just draw a line through here. That makes it a little bit easier in case you can't get the count. And also with trend lines here as well, they tend to move across the same. So if a market came down to hit the trend line here, it would bounce off it, it would come through, and it would come back and check it, and then it would move down. So that's how it migrates from one side to the other, the same as these levels here. So it's support here and then becomes the resistance here. Alrighty, thanks for tuning in. Cheers.